In this session, we're going to be talking about all the different ways an investor can lose with investing in your opportunity. Now, I know this is an unusual topic, but it's important for you to understand, right? Because as a founder, when we go to raise money for our business, there is lots of different competition that we have. And the reason I say that is because the competition is every single other thing that they can potentially put their money into. So the 4 things that you need to understand that you're competing with for capital is number 1, right? An investor is what their loss aversion is towards. Now, the first loss is for money, right? Now, that is the most obvious one, that they invest into your business and that you lose their money. That is the most obvious one that everyone understands. The second thing that they could potentially lose is time. Now, none of us can actually get any additional time, right? So the loss of time is an important factor that sits in the mind of an investor, because they just put in your money and then they never hear from you again. A lot of investors will like to invest their time and be active with an investment opportunity. Now, with this time, they could be either activating it with you or it could be with someone else. So losing that time is incredibly valuable to them. So the first one is money. The second one is time, right? Now, the third one is reputation. So there's been plenty of scenarios where investors have gone into companies, and then with the downfall of that company, the investors have been mentioned as well, right? Now, so reputation is another one which sometimes comes to mind for an investor, not as frequent in Australia, but we have seen it. So reputation could be one. Now, also reputation is not just in the public sphere, it could be with their mates. So it could be with their golf buddies, their friends, etc., that they hang out with, that they've told about their investment and it's fallen over, right? So reputation is another important one. And the last one is the one that no founder really thinks about, is opportunity cost, right? So there is a massive opportunity cost into investing into your business as opposed to potentially investing into something else. So if you think about it, think about all the other things they could invest into. So for example, if everyone put their money on Afterpay in 2016, we know what that would look like right now. But if they put it somewhere else, then there's a question about that, right? So opportunity cost is always a significant thing in the mind of investors when they're actually investing their capital, right? So to break down the 4 elements again, investors are worried about losing time, they're worried about losing money, they're worried about losing face, let's say. And then the last one is the opportunity cost of investing into your business. They are the 4 elements of loss for a potential investor when they're looking at your opportunity.